What's up, everybody? Good morning and welcome to Friday morning's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope you guys have all had an amazing week. I know I was not on yesterday as we had a live trade room hosted by Mr. Justin Krebs. And then we had a recorded version this week, so it's been a little bit off on our normal weekly schedule, but that was due to the fact that we had an active trading intensive class this week. And the active trading intensive, there's not a whole lot of active trading when the market is just chopping sideways. So it was not the world's most active of active trading sessions, but that's okay. We covered a lot of ground and got a lot of things covered. So what we're going to do today is what we do each and every day. We're going to look at our 10 to 12 futures markets from an educational perspective, identifying breakouts and reversals. Can I turn up the mic? I could probably do that. How's that, Dennis? That should be better. Appreciate that. Thanks for the heads up. Let me know if that is better inside of the chat box. That way I can double check and make sure that we're good. All right. So beautiful. All right. So let's go ahead and get rolling with today's session. Let me shrink my head here. And let's start with the overall. Well, let's take a look real quick at a quick S&P and major market comparison. And I like to start with the major market comparisons over the past 5 days. So we're just looking here on a percentage change over the last week. So this is a very clear picture that over the last week, the Russell and the Dow are up almost 3%, 2.94, 2.91 respectively. The S&P is up 1.29 and the NASDAQ is down 0.86. Now remember, this week included the Monday big vaccination news. Right? So this week included the Monday's big vaccination news. Here was the move on the Russell, if everyone can see that one pretty clearly. Here was the move in the Dow, right? Same picture. And then the S&P move was here. And then in the NASDAQ, it was here. So what we really saw, I think, which is pretty interesting, is that the big moves that occurred in these indices around the vaccination news, it was really different in the NASDAQ versus every other market. And the big reason being is that the NASDAQ has more of those stay-at-home plays. Okay, the NASDAQ has more of those stay-at-home plays where everybody says, okay, well, technology is gonna be the main thing that we're going to focus on, and we're going to look at technology stocks. And so they came down actually on that announcement for the most part. And so now what we're seeing, though, is that we are still inside of that one big candles range. My point behind showing that is that the high for our week, we got back up to there on Wednesday in the Russell, but that was the high for the week in the S&P and the Dow and the NASDAQ. That was the high point. And we're still inside of that one candle's range throughout the whole rest of the week, which made for essentially an inside day, right? I agree, Dennis, there are more lockdowns coming, definitely more concerning for the market in general. And so, you know, it's not if more lockdowns are coming, it's when, because they are definitely going to be coming. It's just a matter of when and to what degree, right? The other question, I guess, for this time around would be, how much do we already know about how it's going to affect us, and is some of that already priced in? I don't know that, and I'm not going to try to guess that. But what I am going to do is let the market tell me what to do. So in looking at today's market, you know, on Wednesday in the live trade room, we sold the 35.85 SPX spread against the 35.30, I think it was. And we wound up getting up the credit for the one-day trade. I think you might get another opportunity today once the market opens to sell the SPX Iron Condor. I'd feel very comfortable if I could get a range of this, that we would stay inside of that range. And I know that's fairly wide, but that's 35.20 by 35.90. If I can get that kind of a range, I'd feel pretty good about that overall for today. Now, what's interesting is that when you find a range for a one-day Iron Condor sale, for those of you out there that don't know what that is, you definitely would like to learn that and see what that is. So if you don't trade options as of yet, my question to you is very simple. Why? You should be trading options and understand how to do that, because it sets you up with so many more opportunities. Now, on a 15-minute chart, we do have a decent level right here that I think is worth exploring today for a reversal. Now, it's a good but not great level. Matter of fact, a better level from a structure standpoint is down here. The problem with this one is the time of day that it's formed. This is not the best time of day to look for high-quality zones. And so from a pure structure standpoint, I like this 35.39 half by 35.36 quarter as kind of my best area for a reversal. Now, can I put on both? Can I put on both the reversal trade and the iron condor? Absolutely you can, right? Because think about it. If I put on both and let's say that this level hits and price comes up and I get stopped out of my iron condor, well, great. Well, then I'm doing really, really well on my directional trade, probably better than I would have made on my iron condor in the first place. So it almost acts as a natural hedge to itself. Now, what if it hits here and continues to run down? Well, then certainly I'm going to take the loss on both of them if I'm absolutely that far wrong, right? What it really comes down to is how far wrong am I going to be? And that's why, I kind of think you've got a decent setup with that to take that long. So give me some thoughts on that in the chat window down below. I'd love to hear what you guys' thoughts are on that in the chat window. Do me a favor, by the way, if you're here and you're watching, there's about 40 of you that are watching live. Do me a favor, click that little thumbs up button. The likes really, really help the computer. They know what people are doing. And then make sure you say hello to me in the chat window so that I know who's here, because I like to talk to people. Makes my life easier. All right. NASDAQ. So sitting here in the NASDAQ, we had a potential breakout area yesterday in the NASDAQ. And unfortunately never really got the follow-through on a breakout. We were right there and never got the follow-through on the breakout. I think the breakout is still very much in play. There we go. Sonia, Liz, thank you. Dennis, obviously, and Samuel. So, all right. Never really got the follow-through on the breakout. So if we get basing in here, I still think that we have a potential for a breakout just above this level, but I'm going to need to get basing right inside of this circle area, right? So I need to get that in here. Fit Friday. I like it. Fitness Rush. As they say, never skip leg day. All right. So look for the basing right in here. If we get a breakout above there, that's the area I think that you're going to have a decent opportunity. Now, I was a little cautious about that breakout because on the hourly chart, that is just below this fairly clean wick over wick. But the fact that we're basing in front of this wick over wick weakens that level substantially and thus makes it a better candidate for a breakout trade. On a reversal possibility, if we get a reversal, look back to, I don't like this one as clean as the S&P. I was going to say look back to this wick over wick, but it's already been tested. And then this long upper wick here tells me, though it wasn't tested a second time, it definitely has been eaten into a bit. And so I'm not going to pick a demand level down below. Matter of fact, I'm interested to see if we break below here, the price could actually run a bit lower. But for now, I'll just stick with the breakout trade up above. In the Russell, we've got a breakout trade in the rut up above us. We said that we need basing before the level. Obviously, we don't have that as of yet, so that level stays very much intact. If I look to the potential reversal trade, now this one right in here is a pretty decent wick over wick that's not yet been retested. 17.14, 17.12. Stop, obviously, the tightest would have to go below this candle down here. Jersey Trader, what's up, my friend? Kurt, Andrew, William, thank you for joining us. Miss Jasmine, thank you. All right. Let me make this in purple so that is ready to roll. And then I think that makes sense on the Russell. So, and then the last one is the Dow Jones. The Dow Jones also a little bit of a potential breakout above 29,595. If we get quality basing in here, then we would look for a long on a reversal trade. on a smaller time period, kind of similar in time of the day to our other markets, that's the level that makes the most sense. So there are a couple of 15-minute reversal levels on each of these. I do believe that for those of you that trade options, the one-day iron condor makes sense today on some of these positions, those index options, the one-day positions for price to stay inside of a range. What about the Russell at 1 a.m.? So I've got the Russell at 2. Could you do the Russell at 1? Sure. I mean, that's actually very clean as well because it's a wick over wick just above a pivot high. Both are actually fairly clean levels. You get stopped out on one. I think the other one's still pretty good. Now, the reason I took the higher up one in the middle of the move was basically because of this. So all of this over here on the left made me consider this area here on the right. That's the big difference there. Okay? All right, so what I'm going to do is I'm going to share this grid. Inside of the trade feed. And let's move on to commodities. All right. Moving over to commodities, looking at our energies and metals. Yeah, it's exactly right, Sean. It's a strong fair price value area where we can see a potential reversal. So looking at this crude oil, we definitely have rallied kind of up over the last few days, but showing a bit of weakness. On the 4-hour, if I throw up my momentum indicator, it's not giving me as big of a divergence actually as I expected it to be, but it's definitely it's definitely showing a little bit of slowing momentum. And I would be a little concerned that we're going to see price come down from this region. Now, I normally would look at this level here as a quality area of demand, except it's not formed at a good time of the day, and we're basing in front of the level. And so the basing in front of the level kind of removes that from contention for a high-quality zone. Now, when I go down to the 15-minute chart, we do have this little itty-bitty level right here before this big move up. Now, keep an eye out for inventory numbers as those come out. And remember, we can't take a breakout trade around inventory numbers. But I wouldn't be too surprised if we get another touch here and we base, and then you get a breakdown. So I would keep that very much in play. Looking above me, I think this is a pretty clean area. If we do get a decent return back to there, I don't think that we're going to get there today, but that to me looks like a really good spot to look at for Sunday night. I know nat gas was moved, Andrew. I thought oil was as well. I guess I was incorrect. I guess I was misspoken. I know nat gas was for certain. That one's today. I will tell you, I don't look at the numbers themselves. I don't look at the numbers themselves. All I know is that I don't want to trade the breakout at the announcement time. Remember, now, why don't I look at the numbers themselves? Think about that for a minute. Why don't I look at the numbers themselves? Why don't I look at the numbers themselves? Because I don't care what the number is. What I care about is the market's reaction to the number. So all I want to know is when that inventory announcement's coming out. Obviously, in CL, it didn't do much yesterday. So, yeah, that's right. They were both pushed back a day. Inventories usually. So, good question. Jasmine says, is there whether the CL has any reflection of the ES or the YM? We talked a little bit about this a couple of days ago. I don't really buy too much into correlations like I used to. I feel like the correlations are kind of broken in a lot of these markets. So do they have correlation? Yeah, I'm sure that they do. As a matter of fact, I can throw an SPX comparison chart on here, and you can see a bit of the correlation. Now, this isn't the 24-hour market. So the SPX there is not a 24-hour market, so it doesn't play out quite as effectively. So let me look at the daily chart. But when I look at the daily chart, you do see that there is an SPX correlation overall. It's not perfect correlation, but there is a bit of a correlation into the CL with the S&P. All right. Yeah, definitely not a primary decision tool. I'd agree with that for certain, Dennis. Not going to be a decision-making tool at all. When I look up above, I don't see any super clean levels on here up above. Now, we did look yesterday at the potential for trading an iron condor on this. There wasn't a lot of great premium that was being offered in crude oil. Gold did offer some better premium, and we had shifted that iron condor up around this 1940 region for an 8-day trade, knowing that our stop was going to be pretty close to here. But for a 1-day trade, we actually looked at 1905. Well, with that being said, the rule was if we start basing in front of here, anticipate a breakout and for price to run. Now, as it stands right now, my basing is not close enough for a breakout. This basing is not a medium, this is not an immediate level for basing. It's close, but it's not immediate, right? So on our trade optimization plan, that would score a 1 instead of a 2 because it's basing close to the level, but not immediately before the level. For immediately before the level, I need basing in here. So what that means is that we're sitting right at the area where the basing would need to occur in order for us to take a breakout. If we break out before we get another 1 or 2 candles in here, then it's not going to be a valid trade. I'd have to wait for the retest. Now it's 7:16, which means I've still got 40 more minutes roughly for this, 44 more minutes for this candle to print. And if this candle doesn't print inside of that, underneath that line and inside that box, then to me, it's not going to truly be enough basing for me to take a long on a breakout. Now, if we do get the basing and the breakout does occur, you essentially have clean air all the way up to the most obvious area of supply. Now, there are a few stopping points in between on the way up, and your first target would be somewhere around 1905. I think that would be a legitimate first target for this thing would be somewhere around 1905. Nat gas, we looked at nat gas the other day, got a decent little reversal trade off of, this is the picture of, well, Kurt, it's totally up to you if you want to hold through the weekend. If you're going to hold through the weekend, you have to make sure that you understand how to hedge it utilizing options on futures. And if not, then I certainly would get out before there. But I think with that clean air, we could move fairly quickly. Nat gas, this is a wick over wick above a pivot high. That's the kind of trades that we lean on. We didn't get a great move the first touch, but the second touch, we got a really nice move overnight, and it's run up pretty much the whole evening. So that level needs to be removed. And then at this point, I've got a level up here that's pretty good. I don't have a lot of great reversals to lean on from here. And so I'm just going to leave this one blank. Let's see what happens after the inventory announcement comes out, which can cause a little bit of movement. And then there's copper. There's not a whole lot to review in copper. I want to make sure that I've only got about 12 minutes left, so I want to make sure that I get to my bonds and currencies. All right, so let me put the commodities grid up. By the way, all of these grids, all of these charts are available at tradersarmy.com underneath the Trade Update tab. If you're not a member of Traders Army, come on down. We'd love to have you join us. We do live trade rooms every Sunday, Tuesday, Thursday, and Wednesday. I guess Sunday, Tuesday, Wednesday, and Thursday, whether it is open forum, wealth essentials, options, or futures. So come join us. Promo code TRADERS60. Get 60% off your first month. So, all right, paid the bills. Let's move on. New Zealand dollar. Looking at the New Zealand dollar, we on a daily chart, I want to show the daily because I want to show that we've gotten above these pivots here, and we're pulling back to where those areas are. And so I appreciate that, man. I'm glad you're a part. We try to give all the support and help we can. On the 1 hour time period, we've got a nice pullback. Let me see that on the 4. So when I look at this on the 4, we talk about candle-to-candle trading a lot, right? And here is a picture of what I look for in candle-to-candle trading. So I want to see Fibonacci confluence when I look at candle-to-candle style of trading, and we're talking about the 4 hour chart. We've come back to just below the 23.6 retracement, almost to the 38.2. Now, the next level, the next kind of area that I might want to look to draw would be this one right here. And in this case, we've pulled back to to about the 61.8 retracement. Now, why do I use those fib retracements? Well, that's called confluence. When I use two areas, two big trends, and I get them to come together. I don't have a great zone, a great Fibonacci zone off of the here to here. That's right between the 23.6 and the 38.2, but I also don't have a great area of demand. And so my point behind that is that I would need a candle-to-candle opportunity would have to be accompanied with a strong reversal candlestick. If you're of my mind, and I believe that this market would head up rather than come back down, then this candlestick here might be a good enough reversal candlestick. So if that's the case, you can be in that trade above 68.33 with your stop below the low of that candle, which is about 68.12. Now, what's my target on this? Well, my target, very simply, my target is 2 to 1. So if my distance from here to here is my risk, that to that is my risk. Let's color that so everybody can see that it's red. Duplicate drawing. There's a 1-to-1 reward to risk, right? And then let's duplicate that drawing. There's our 2-to-1 reward to risk. So if you get into that position, you've got this up here as your first target, okay? If you decide you want to take the candle-to-candle area. Now, that would be my first target. When do I move my stop? Well, I've got two choices for moving my stop. A, I can move my stop once I've gone 2 to 1 and let price continue to run. B, once this candle has been printed, if we get long on above here, I can take my stop once that candle's printed and move my stop up. And then once the next candle's printed, move my stop up. Remember, these are 4-hour candles. So you're moving your stop once every 4 hours. But what that allows you to do is if we start to get a good run, in the market, allows you to follow that run and stay part of it. Looking at our other currency markets, let me just kind of look at them from a bigger picture perspective on all of them. Starting with the Great British Pound on our 4-hour chart. We pulled back a little bit yesterday. I would say that we don't have a lot of great levels in here. There's nothing that's sticking out at me as far as, hey, we should trade that. This area down here is actually pretty clean, but I don't like my momentum, which is very much coming down. So I'm a little nervous, a little cautious about taking a long right here, because if I take a long right here on this hourly chart, and that's the level I'm looking at, then I've got lower swing high, lower swing high, lower swing high. Now, I normally use the 4-hour for those swing highs and swing lows, but that would give me a new official lower swing high. And so I'm not comfortable with that area for a demand zone. So for right now, the Great British Pound is also putting in what could be a decent candle-to-candle reversal, but this one would be a short is what it looks like. Japanese yen. So our Japanese yen, we have clean air above us, right? Clean air above us in the yen, above this region, provided that we get basing. If we don't get quality basing and price jumps up, then look for the reversal candle as a better opportunity for price to come back down into an area of demand. And I would say that this is the area that makes the most sense right now. Okay? So, Aussie dollar. So the Aussie yesterday, we had a little bit of a breakdown, but the breakdown kind of stalled throughout the day. Didn't do a whole heck of a lot. Reversed at this little area of demand right here. But the Aussie's telling me very clearly, it's giving me a very clear signal. Don't mess with me, bro. That's the signal that it's giving me, saying don't mess with me. And if you are, just expect that it's going to be a long, grinding fight. And so I'm not going to take a trade on this one. I don't see a great level until we get down to here, right? Then it's going to be a much better trade. Might we get a breakout opportunity right here if we get basing? Absolutely, we could. You could theoretically even go candle-to-candle short on this with this reversal candle if you think price is going to come back down to here, which I think this is a good magnet for price. But I'm not a huge fan of any of the levels that are being set up at the moment. All right. Anybody thoughts on that? On those levels that are being set up? All right. All right. Let's go to the next one. That's the one I just did. All right. So looking at bonds and currencies, you're right, John. At some point, that I think is part of the issue. I'm wondering if the market is hedging its bets, thinking that there's more evidence out there than what the media is telling us here in the U.S. I don't know. I don't know that at all, but it almost feels that way, right? Like the smart money is saying, "Hey, listen, we don't know what's going to happen here, so let's just keep some money on the sidelines and let's just stay sideways for a bit." I don't know that for certain. That's just conjecture. I mean, hey, listen, there's more evidence out there than people are saying, and so there's a shot. So it's kind of like it's kind of like anybody remember the movie Dumb and Dumber? Anybody remember the movie Dumb and Dumber? What are the chances you'll become president again? 1 in a million. So you're saying there's a chance. All right, I couldn't resist. ZN, let's look to this little 15-minute zone right here for a potential reversal. Price comes into here. We might see a little bounce off of that zone. I like the fact that it was an old area of support, or excuse me, of resistance through here. Old resistance acting as new support. The euro level, we had this potential breakout level in the euro yesterday. We actually got the basing after the breakout on the 15-minute chart. I mean, certainly it wasn't a trade that I was going to be around to take, but definitely got a little bit of a basing pattern in here. I think that the euro, we would look above here for the next breakout, and then the target would be the opposing supply right up in there. And then the Canadian dollar, looking at our dollar Canadian, we had a level yesterday that was identified that was actually very clean. One of our members, Kelly, found this one and pointed it out, and I really, really like the level because it's a wick over wick just below a pivot high. Typically, some of my best levels are going to be those wick over wicks below pivot highs. But that means I'm going way up there to find my closest level, meaning I don't have anything super close. Today's not a bad day to go work on your short game. I say that a lot, right? When I believe that it's a good day to work on your short game, I tell you it's a good day to work on your short game. And if you don't know what the short game is, then you need to play more golf. Because I don't see, a tremendous amount out there. Today's a good day to understand options, and trading options in this kind of market is actually typically going to be very beneficial. You might actually be rewarded with some good options premiums this week, as we're looking at the fact that there's just not as much volatility going on to keep it in there. So. Nathaniel says, Chuck, on the ES, would it be better to take the breakdown on the hourly at 35.07 because it's making lower highs? And is there a wick over wick above to potentially stop an upside to the breakout? So let's go back to the ES and let's talk about that. Oh, good point, Dennis. I hope you guys are doing okay there in Charlotte. I saw some news reports about that. Usually the flooding is reserved for Texas. So 35.07 on a breakdown. So you're talking right here. I think that's okay. My only problem with taking a breakdown below 35.07 is that if I go to the daily chart and I throw our average range, right? We've got about a 70-point range. Well, we're already up 25. And if we were to break down below that area, that would be another 50 points that we would drop, right? So that's a pretty strong that's a pretty strong range, and I don't know how much more leg room we'd have in us for a breakdown at that level today. I think on Sunday night, sure, I'd be more than willing to consider that on Sunday night. As far as the breakout to the upside, you are correct. There is a wick over wick here that could act as a stopping point, but we're basing in front of the level. So I've got an alert set up in there to tell me what does it look like for a confirmation short if we do get back into there. Yeah, that does stink, Dennis, when all you can see is the top of people's cars. We've seen that here. So ATR, essentially just think about it as the average range that price trades over the last X number of periods, right? It's the average range that price trades over the last X number of periods. So when I'm looking at a 1 hour chart, well, let me just pull it up here real quick. When I'm looking at a 1 hour chart, I've got it set to show the average range over the last 14 periods. What's kind of neat about this particular platform, yeah, I think it's a good idea. I can change that to a smaller type in here, and then it will tell you exactly what type of average is used in that calculation. You can change the average that used in that calculation. The Wilders is the one that's the standard and most commonly used, and it talks about, okay, how do we calculate that? Right? It's over the price, the length, and the displacement of the level. So there's a tremendous amount of information on these indicators. So if you want to look at any of these indicators, just go to Edit Study. And when you go to the Edit, the little question mark here will allow you to get more information about each one of those. Okay, Jasmine? Hopefully that helps. But it's basically the amount it moves over the last X number of periods on average. All right. So that's all I have for today, everybody. I hope you guys have a phenomenal, phenomenal Friday. I appreciate you all being here. Hey, do me a favor. Have a great weekend. Do something today that's fun. Think about your family. I know as everybody's worried about staying in and coronavirus and all that stuff. There's today's Friday the 13th of 2020. I mean, if you're going to have a Friday the 13th, let's have a Friday the 13th in 2020 for goodness sakes. But just remember, there's a whole lot that can go on the good side. Keep your head up. Keep your head in the game. Keep smiling, everybody. And I'll talk to you soon. See ya.